Welcome to Caching Waves. This is an Elliott Wave update for UEC Uranium Energy Corp. A little different than the crypto, but I just wanted to discuss this because it's something I'm heavily invested to myself. I wanted to discuss with you a couple news articles that just came out and an interview, as well as the fact that my main thesis is that uranium is going to be one of the fastest growing sectors over the next 5 to 6 years. And there's massive opportunity right now as long as things go to plan. It is being redefined as green energy, and there was just the Russian ban implemented. So I want to talk about specifically like US and Canadian uranium companies. This is one that stood out to me. I'll show you the count in a moment, but I wanted to play a little video with the CEO just so you can see it. It's about 5 minutes long. It's a good watch. I suggest watching it. And I'll show you the news that came out after this. So this was from May 3rd, just to be clear, May 3rd.
Energy Corp, up more than 4% since news of that Russian ban. It's a domestic uranium producer that shut down some of its mines in the wake of the 2011 Fukushima disaster. But UEC plans to bring those back online this year and in 2025 to meet soaring demand for the mineral. Joining me now for an exclusive interview is CEO Amir Adnani. Amir, thank you very much for being here. This is such a multifaceted story because it's not just about nuclear energy anymore. It's the crossroads of so many different current investing themes. What is it about U.S. uranium production that needs to change in order for us to be better positioned as a country?
3 words, Dom: grow, grow, and grow.
That's like drill, 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 right?
Drill, drill, drill. You got it. And the bottom line is we used to lead the world in uranium mining. The U.S. industry did before the collapse of the Soviet Union. Following the Soviet Union collapse, we made room for them in the Western markets. And this is the reversal of that, where we're really seeing a repatriation of the nuclear fuel cycle, that the $2.7 billion being provided in policy and the Russian uranium ban should provide. There's absolutely, I think, every intention to see growth in front of us here for the domestic industry, for all the reasons you mentioned.
Oh, so for the oil industry, it's about trying to find kind of proven reserves, find out where the commodity actually lays underground. Does the U.S., does domestic U.S. territory have the ability to support ramped up production? How prevalent can we make the uranium business in the U.S.?
100%. The world's largest producer of uranium is the country of Kazakhstan. After Kazakhstan, the state of Wyoming, for example, has produced more uranium using the low-cost in-situ recovery method than any other jurisdiction. We have a over 40-year history of uranium mining in states like Wyoming and Texas. And so the know-how is there, the knowledge is there, Mother Nature is there in terms of the mineral endowment. It's a lot like oil and gas in the sense that when we were importing over 50% of our requirements in early 2000s, it didn't seem feasible to think we can one day be exporting natural gas or oil. And it's the same thing with uranium. I think the U.S. has the right ingredients, and the companies like ours who are leading the way towards restarting uranium. And look, Dom, right now we're importing over 95% of our uranium requirements. Uranium is so critical to the intersection of all these themes that you talked about: energy security, national security, energy demand from data centers for AI, generative AI. So we have to address this issue head on. And now what if we have Russian retaliation? And we should talk about that. I mean, there's the risk here of what people was talking about, that if we get a retaliation from the Russians to halt exports to the U.S. sooner in reaction to the ban, then we could see even further risk to higher uranium prices.
This is a capital expenditure story that's not 1 or 2 or 3 years in the making. I mean, to get these mines up, running, online, productive could be a 3, 5, 10, 15, 20-year proposition to really get us the scale that we need.
Yeah.
Is the industry, is your company prepared to make that kind of commitment given the sentiment around nuclear power in this country?
Let's talk about commitment. I started this company 19 years ago. We've been committed for 19 years. And since the downturn we had in uranium was a hated sector for a long time. My company has made close to $1 billion of acquisitions of uranium, idled mines, and projects when uranium prices were between $20 to $40 per pound. Today, they're over $90 per pound. And so clearly the commitment has been there from folks and companies like UEC that have demonstrated that we want to lead and lead U.S. uranium production higher. We are the fastest growing company. But this is, as you point out correctly, a long-dated industry. These are long-term trends. And Dom, I think we're going to have higher uranium prices for longer, because even where the price is today at $92, we're well short of the all-time high on an inflation-adjusted basis, which is closer to $200 per pound.
Nuclear energy is the new renewable energy power source that we know, so to speak, versus some of the other technologies out there. But there's been an overwhelmingly negative sentiment around nuclear power among certain parts of this country. Do you think that that's changed enough, given the energy demands that we will see around AI and data centers, to make people feel like we need to be more comfortable with nuclear power?
Just this morning, there were reports that data center developers in Northern Virginia are looking for the equivalence of several nuclear reactors' power capacity to secure for these new data centers. Several nuclear reactors provide enough power for 3 million households, approximately. That's the kind of scale and demand that we're talking about, in the sense that as we look for this green energy transition to be realized, and as we look for economies to become more electrified, and the themes around electrification become more important, especially led by generative AI, there's no doubt that nuclear energy is the best option we have for large, low-cost, emission-free power. And uranium is the highest form of energy density that we know of on the planet. The uranium fuel really has a huge advantage that I think we're starting to see that broad acceptance for. And the bill that passed, the Russian uranium ban bill, was 100% had bipartisan support, unanimous support in the Senate and the House. And hopefully we'll see President Biden sign this any day.
It's a big trend to watch for sure. Amir Adnani, thank you very much for joining us.
As you can see, USC is one of the biggest producers right now, and he was talking about Biden signing it into law. He signed it into law, the Russian ban nuclear reactor fuel imports, as you can see. And there's a lot of good news for this. The law also unlocks $2.7 billion in previous legislation to build out the U.S. uranium fuel industry. So you can go down this rabbit hole if you want, but the demand for it is very high, and the largest producer, Russia, has now been signed into law to ban imports from it. So I just wanted to show you that before I hopped into the chart. So this is quickly becoming one of my biggest holdings. And I'll show you that count. This is why. This is all just potential, but there's our all-time high way back in 2010. And I have this as a several series of nested 1-2s. You can see we're hovering at that all-time high. And the great thing about when you get breakouts above all-time highs is there's no resistance. We just buy and create corrections until the trend is exhausted. So this is all just potential, and you're in validation. I'll show you those. But as of right now, I have this labeled as a 1-2, 1-2, 1-2. This is on a weekly chart. So you can imagine where we could go within the next year or two, especially if UEC is leading the way. So just for potentials, it looks like not much, but if we squeeze this up back at the all-time lows back in 2008, that was a 4,300% increase in value, right? Even from the COVID low to the last peak, that was about 1,700%. This last move was about 200%. And remember, this is about to be our strongest wave, the third of the third. So I put on rough targets. I put from the beginning of wave 1 off of the low of wave 2. That would take us up to $266, which I know seems absolutely crazy. But I've been told that many times. It's never going to happen until it does. So that would be a 3,800% or 38x. If we hit the targets in white, which is the first one too, let me change the color of that so it matches up. that would be that 1.618. It's hard to say which one we'll get now. Is $175. That's 25x. So this is only the third wave. I would myself, if this ends up panning out, I'd be taking profit at this like third of the third or this third, because after that fact we do expect a lot of sideways consolidation similar in length as this one. So just going for the next move only. Now I'm going to go down to the daily, and I have two pitchforks set up here. I have the larger weekly and the daily, which would be our third wave for time wise. So this is our 1-2-1-2, our second 1-2, our third 1-2. There's nice 5 waves in both. I've mapped those out. I will track this on smaller time frames moving forward, but I just wanted to show you this in a larger trend right now. But we should be respecting these pitchforks if this is as bullish as I think. So right now that target would be just the 1.382 right now, which is 133, and about a 20x-ish. So just as for timeline, if this does play out, the third wave should take about 1 to 1.618 in time of the first 1-2. So we're looking at a range of June next year to into 2026. So this is looking quite nice. Let's look at the smaller time frames. There's our 1-2. I have it all the way down in white, right? So this is about a year out target for a 20x, and that is proposing the fact that this wave 2 is complete. If we go to linear scale, which is what I'm going with, we've hit the 50% retracement of that third 1-2 in a very nice looking ABC, 535. We've also channeled very nicely here. You can see, very nice move. And we have our 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. You can see our 5 waves within that third 1-2. Looking for a divergence here, third and the fifth, we got that. So everything is looking good on UEC. So this is kind of a far out timeline, but I am going to be readjusting my portfolio and making this a larger percentage of my holdings. Now, one thing I will say, I learned this because I traded uranium during COVID there. I was about 50% of picking the companies correctly. My thesis was a little bit off, full honesty here. Always want to be honest about this stuff, but I was picking a lot of exploration companies rather than producers, and they really underperformed. I also had bigger producers like CCJ, and they did well. But this time focusing in on producers more than exploration and drilling. So ones that are already producing uranium. So this is one that really sticks out. It has one of the best setups I see, and I'm not sure how high it'll go. Obviously, we have to track these waves as we pan out. But if we come to the standard 1.618 extension, we're looking at a 37, 38x. If we come a little lower, just the 1.618, 175, we're looking at 23x. So that would be every 1,000 you invest, you make 22,000, right? Pretty nice setup. Invalidation of this is down on the daily is the wave 2 low, but we wouldn't want to see it come below the golden zone here. I would put it myself at the 66, just past the 618. If I were to give you any advice, not financial advice by any means, you make your own decisions, but if I wasn't in this yet, that's where I'd want my stop to be, 368. Which is obviously a pretty big drop, but you got to make those decisions for yourself, right? But anyways, I just wanted to bring that to your attention. It looks really good. I'm sticking with producers now, not exploration, nothing like that. Yeah, this chart looks really, really good, and I'm going to be adding to my portfolio as soon as the market opens on Monday. All right, guys, that's it for this one. Thanks for watching. I'll see you on the next one.